The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And what I decided to do, I was listening to Basil's show, and he had a caller calling in about the relationship between gold and silver. And I just happened to be doing that at the same time he was talking, so I thought I would start the show with that chart. I put it into Tiger TV. It shows the relationship between the gold and silver on a daily basis, and the red line that you'll see on the chart is showing you that the silver is actually getting a little bit stronger than gold. This is the first time this has happened this year. Well, actually since February, we haven't had this type of move. We need gold to get above, the 1780 level, and we need silver to get above the $35 per ounce level for it to really start to move in the right direction. But yesterday was a very, very critical day in the silver market. It had a lot of things happening with it that we were talking about on the show, and I think that they are worthy of taking a look at the chart again. And all I did was I put up a 60-minute chart into Tiger TV, which takes you back several months, and it basically shows you the ABCD bottom that was made down at the $30.70 per ounce level that happened on November the 5th. And then if you have a chance to take a look at this, you'll see that the two red lines that I have marked in there basically line up for a head and shoulders pattern, with the left shoulder being on the 22nd of October and the right shoulder being on the solar eclipse and new moon of the 14th of November. And so that sets that up, and then that happened to be a 382 retracement at that time, and that made time in price square. In other words, the time down to the time up was equal. And then you had the 382 retracement, and then you had the very large AB equals CD pattern that pushed it up to the level of 34.25, and that was the chart of yesterday. And since that time, we've actually taken that high out, which is a very positive sign for silver, because yesterday's low was an exact 618 retracement of the new moon solar eclipse. Mr. Z in the trading den for Tiger TV and TFNN was telling about that before it was happening. He was saying to watch to buy silver around 32.90, and the low was 32.88, and it's gone to 34.70 or 34.90, I believe. That's a $10,000 move in 2 days. Now most people can't take advantage of that, but with using SLV and some of the other ETFs that are available, that's something that you can use to profit from them. There's some people on that in that TFNN. In fact, most of them are very, very good, and they're actually very helpful in the types of trades that they show people, that they're doing. And that's why I think it's important that if you do something like that, it gives you a idea of at least where you stand in the market. Now, we need to talk just a little bit about the stock market. I know we've had a little bit of movement after the one of the three boys from Larry Curley and Mo came on and talked about they're not having any help with the fiscal deficit. But we're looking at the chart that I put into Tiger TV is the E-mini going 60 minutes, which goes back into September, and it shows that the high that we had today was a 61% retracement coming off of that high. What happened this morning, folks, really doesn't mean very much. All that did today, that move from 1418 to 1407, just completed a basic AB, CD pattern on the 5-minute basis. It really means not very much. But if we get below 1405, then it will start to mean something, because then we're beginning to get down to the possible, being down on the day, and then that does mean something because then it sets up a possibility for an outside day. Now, in order for this trade to work, and the trade that we did is we bought the SDS January 60 calls yesterday for $1.50. I think they're trading for around $1.22 or something like that now. So that's about $28, out of the money right now. But we have enough time in that to see that it works. Now, the scenario that we wanted was it to come into the 28th and to make it to the 29th or even to Friday would not be, unusual. What you don't want to have happen is to have the Dow be up like 200 points on Friday, because that really tells you that we're probably wrong on this. But we have to wait until Friday. Now, it's going to be difficult for the market to close down tomorrow because it's the last day of the month and it's the last week of course, it's the last week of the month, of course, but it's the Friday of the last day of the month, and it's very, the mutual funds and the hedge fund people, they don't usually, sell into strength. So the chances of a market turning, it has to either turn today or tomorrow, which would be an amazing thing, but it usually will not turn down on that Friday. It could turn down on Monday. That's why we have a 3-day window here. If you remember, on the new moon that we had, the new moon came in on the 13th of November, yet the market didn't bottom until that Friday. So there were 3 days there where the market actually went a tiny bit lower, but, really didn't go anywhere. So that's the possibility of that happening. That's the reasoning for using the options as opposed to the futures. And, we don't use those very often, but that's it. We're out of the Apple. We were fortunate that we got out of it before it moved another $20 higher. But the options that we were buying when Apple was $538, we got out of those yesterday when Apple was $578. It's about as good as I can get. It's a easy way to trade a $500 stock, which isn't easy in any stretch of anybody's imagination these days. Now, there is one other that we talked about yesterday, and that was Newmont Mining. And, we were mentioning to you folks that, Newmont had a potential triple test of the bottom. And then we also had a beautiful 61% pullback yesterday at that 55.80 area in Newmont. And so if you happen to be, a buyer of Newmont, you don't want the stock to go below 45, so your risk here would be less than $1. Right now, it's $1 in the favor of where we suggested to do it, but whether it continues to go up or not, I don't know. All I can say is that you don't want it to go below, 45 in the in Newmont Mining. That's what I'm watching as far as that goes. Now, this is the Commodity Show, and at the break, we're going to have Rich Anderson on from Anderson Capital Management. He's going to be talking to us about some of the things that we're looking at in the commodities. But I thought that we would start out the commodities today with the bond market, because we've been watching bonds perform rather well, given the fact that we've had all this big rally in the stock market, and yet the bond market has actually held above the 61% retracement of the low we made 3 days ago. So that's actually a pretty good sign. And today's high is nothing more than a 61% retracement of the high that we made a day or two earlier. So it's just in a trading range, but there's no one panicking in the bond market yet. They're not running from the flight to quality as of yet, but I think eventually that will happen, but we'll have to, do that one day at a time. So what really is happening today in the stock market is just the normal reaction of traders when someone gets on the tube and says something. It has to go, the S&P has to go below 1405. This is my opinion, of course, and that's when I would think there would be a potential, for a reversal, of some sort. But that's neither here nor there. Now, I wanted to, since we just did the bonds, I also wanted to bring up the relationship between the bonds and the notes, because we've been following this for quite some time now, and it's really getting interesting because the notes are beginning to pick up speed. In other words, the there are people that are still worried about debt in some form or another, because the shorter term paper during a crisis, and shorter term you mean 1 to 5 years, will do better than longer term paper, between 10, 20, or 30 years. And so if you can check the relationship into Tiger TV, you'll see that the bond market has been the strongest, but recently, over the last 5 or 6 days, the note market has actually picked up speed. It backed off a very small amount, and then it also has held up without any appreciable sell-off over the last couple of days. So that's another thing that makes it, the possibility that these bonds and notes still want to try to see higher prices, i.e. lower interest rates. But long term, folks, that one is that's the leaning tower of Pisa. That thing is going to turn over one of these days and really hurt a lot of people. I posted something in the Den the other day about John Adams, and he said there's 2 ways to enslave a nation. One is by the sword and the other is by debt. And that's what we have going now. We have a debt situation in our country that is totally unmanageable. Anybody that believes that it's not, just take a look into the Tiger TV, and you'll see the credit debt as percentage of GDP from 1921 to 2010. And, it looks like the spike in silver at $49 an ounce way back in 1980. So, this is really critical, what's going on. I know the White House is trying to do something about it, and Congress and the Senate. Maybe they'll be able to do something. I'm not sure. But, we do have a big problem. We've been borrowing money at very, very cheap rates for 30 years, since October of 1981, and that will come to an end. I believe that 30-year cycle is very, very close to finishing. We've looked at that butterfly pattern in that 30-year bond chart, many times, and it is still in effect. We still have one more chance for it to make that 155, 156 level, which it's trading at 151. That is not very far away. That could be one day's trading. If something, bad should hit the markets, they could very easily do that and go even higher. So this is, this is what it means, is that it's held up, very well during this time, and the fact that it's held this level is, very, very important as far as a situation for interest rates. Now, we want to get to, I want to cover a few of the grains here before we get Rich on the line here, and because he'll be talking to us about the grains. And I wanted to bring up the chart of wheat, because, those of you that have a chance to, to trade commodities, wheat is one of the more, what I think, well, they're all harmonic, but wheat is just nearly perfect. It just follows the cycles of the A, B, C, D, and the ratios of the Fibonacci numbers, very well. Oh, we got to take a little break here, and then I want to get back and mention something about the ratios. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we were talking about the harmony that's in the wheat market, and the harmony is in any market that's actively traded. But the point that I wanted to try to get across from you is that when you look at this, the first thing to look at are the ratios. Now, I use the ratios of 618 and 786 for contracting ratios, and I looked at ratios of 1.27 and 1.618 for expanding ratios. So that's what I'm looking at when I'm trying to look at these things. So that's the important part. The last part is the timing mechanism, and that is the most difficult time of all, because unless you have time and price equal, it's very difficult. Even with astrology, and that's far from a perfect science, it's hard to get the timing right. That's why when we do some of these things, like when we were watching Apple, remember I was bearish Apple at around 687 a share when we were looking at the puts, and the puts went against us for well over 2 weeks. We were looking at the 650 put, and they end up turning out to be okay, but this is where put can help you out, is the fact that you've got a limited risk and you do have a little bit of time working on it. And these are pretty good, so you don't want to get out of the line too much. We got a caller from Colorado. Are you there, Jim?
Yes, I am, Larry. How are you?
Just fine, sir. What can I do for you?
I was curious what your take was on UNG.
Now, that has something to do with natural gas, right?
Yes, it does.
And is that a UTF for... well, that's just U.S. Natural Gas Daily. That's a corporation that sells gas, doesn't it?
I believe it does. I've been in for quite a while.
I can show the chart. It's got some nice patterns. We had as a matter of fact, to me it looks like we're going to come down to about the level of, looks like at about 18.5, so it's got about another 10% to come down, in my opinion. I'll put this into... Tiger TV to let you take a look at it, but we made a high last week at 22.91, and we backed off $1, and that would set up an ABCD pattern coming in at around 18.95. That's what I'm looking at.
That's very good. I appreciate that.
Well, I don't know if it's going to go there or not, but I wouldn't buy it until it got to that level.
Well, I already own it, so maybe I ought to get out of some of it and see if it does go back down here and get some more, maybe.
Well, the question is, where did you buy it? If you bought it down around 14, you're in pretty good shape. If you bought it at 22, you got to be careful.
Well, no, I've got it I've got an average probably around 18 is probably where I'm at, averaged into it.
Okay, well then what you want to do is, the easiest thing that I would suggest you do is to just make sure that you don't lose on a trade. Put a stop in, so that if the stock does gap sometime, but, try to, keep your risk at the break even. Then you're in a free trade. You can't lose any sleep over that. I mean, that's an easy one.
Okay, sounds good, Larry.
Okay, I hope that helps, Jim.
You bet it did.
And have a nice holiday. Okay, the next one I want to take a look at is the corn market. I posted that into Tiger TV, and I put the daily in there to let folks take a look at it. And it shows, the big move that we had, and then the two cycles that we were talking about, the one in May before the big drought run up, and then the last one that occurred where we had the double bottom coming in at around 710 per bushel. And what we've done now is we've come to a very, very critical level in corn. And I wanted to bring this up on a smaller time frame to let you folks take a look at it, because we have just reached a perfect 786 retracement to the exact penny, and we've done it twice in the December corn at that 762 level, and it's rejected it, actually 3 days in a row. And so that, in fact, this is where we were looking to go short around 762 level, and so far it's working, on the downside. But all you're doing when you're looking at that is you're watching the relationships of these ratios. If you'll study that chart closely, you'll see that the first time that it went to the 61% retracement, it had a nice correction for several days. But then once it went above it, it was destined to go a lot higher. And that's why these ratios are important, because once you break a 618 retracement, the probabilities are that it's going to go to the 786, and vice versa. If you break the 127, the probabilities is it's going to go to the 1.618. Now, those are pretty high probabilities. As a matter of fact, we focused on the Japanese yen last week when it broke above the 82 level against the U.S. dollar, and had that big, had the big run from 82 even to 82.80, I believe. It was a short, it was a small, half-hour chart, but it was still showing you the importance of these ratios. Now, I want to bring up the price of copper, because that's been one that has been, following the market relatively well. We'll take that after the break.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I believe we have Rich Anderson of Anderson Capital Management on. Rich, are you there?
Yeah, hi, Larry. How you doing?
Very good. I hope you had a good holiday with your family.
Oh, it's great. It was great.
That's good. Hey, Rich, tell us what's going on in the grain markets.
Well, the first notice day is tonight, deliveries on the December contracts, and so you see a lot of people getting out of positions. But the main thing that's going on is the weather. We had the drought, the worst drought since 1934 last summer. We missed rain. We were 3 inches below normal in September and October up here in Minnesota. By the way, it's going to be in the 50s here today in Minnesota, and that's pretty darn nice.
Is that above zero or below?
That's above zero.
I remember once I was at your place, and it was almost that much below zero.
I know. I did an experiment that day. You take a boiling cup of water. If you're ever in a place where it's 50 below zero and you want to do an experiment, you take and put a boiling cup of water from the microwave and just step outside the door, throw it up in the air, and the water turns to snow before it hits the ground. It's really cool. I showed my girls that. That was years ago. That was pretty interesting.
Wow.
But it's all about weather. Down in Texas, Oklahoma, Nebraska, it's dry, so that's affecting the wheat. That's why Kansas City wheat's probably one of the places to keep an eye on for much. That's probably one of the best places to be on the long side of the market. It's gone up quite a little here recently, so if we have any kind of a reasonable pullback, 38% pullback, I'd certainly want to own some. We were overpriced versus the world market. Now we're not. But there's other parts of the world besides the southwest United States where they have weather issues. And then the other weather issue is it's been raining. It's planting season down in South America, and it's been raining too much down in Argentina. And we think they might have lost up to 1 million acres that won't get planted. And on the world supply and demand tables, that'll make a difference.
Yeah, Argentina is a very large geographical country too.
Well,
hey, Rich, we've got a caller, our friend John from Philadelphia. John, are you there?
Larry, I am, and greetings to Mr. Anderson.
Hi, John.
Fire away, John, whatever question you have for Rich. Rich, thanks so much for coming on. Rich, I wanted to ask you, I know you are aware something that's just been startling in the past 3 weeks. The price of soybean oil has been kind of lackluster, and 3 weeks ago, export sales primarily to China out of the U.S. started being booked. And I believe now, Rich, export sales are booked in the past 3 weeks are equal to the export forecast the USDA has for the entire year. Could you comment on that for us, please?
Yeah, the funds had been heavy shorts, and if you look at the open interest in the soybean oil over the last 3-4 days, you'll see that they're starting to take, well, they've taken a bunch of their shorts off, number one. Number two, the oil, as is corn, is partly energy, right? So yes. Crude oil prices have been going down. That's dragged the corn down because of ethanol, right? The ethanol production is off. In bean oil, it's biodiesel, and with heating oil or diesel fuel, heating oil is what we call it on the futures market. As crude oil's gone down, and that's gone down, there's been less demand for the bean oil, and there's been tremendous demand for the soybean meal, and so that's what's pulled it down. Now, as far as the Chinese demand, that has to do with their crush, profitability in China. And at some point, when the price of bean oil is cheaper than buying the beans, bringing them over and crush, they're buying the oil. And so that's what's happening. The other thing is down in Brazil, they produce rum for their ethanol, which is sugar, and we've got a relative bumper sugar crop. And so ethanol and biodiesel have been under pressure because of lower crude oil prices, a big crop of sugar, and so that's what everybody was bearish on the oil. But there comes a point when people will use it, and we're at that point. You can see the commercials are taking their the hedge funds are taking their shorts off. So there's probably some value there too.
Speaking of Brazil, Rich, I wanted to just follow up and ask him. You and the folks that you deal with are people speculating that Brazilian ethanol is going to be shipped up here to the U.S. given how cheap sugar prices are?
There was 52 million gallons of ethanol imported into the United States. And again, the only difference is that ours is corn whiskey and theirs is sugar rum, but it burns the same in an engine.
Well, I'll tell you the truth, I prefer rum, Rich.
There has been imports, and that's what's taken the edge off of the bull demand for corn. Now, what can put the bull demand for corn back on is that there's a December 11th crop report. It's much to do about nothing, more than likely. But the January 11th crop report, where we'll see what's the final harvested acres, there's a good chance that the harvested acres never have what USDA is projecting as harvested acres has never been that high in a drought year. And if they reduce it like many of my friends think they will, we could take a 500,000 to 1 million acres harvested out. That'd take 120 million bushels off the supply and demand.
Rich, thanks so much for answering those questions. I do appreciate it.
But don't forget that corn and bean oil are really partly energy, and so as crude oil prices go down, there's less demand that way. And then with sugar cheap, we're getting the South American ethanol.
Great. Thanks. Thank you very much.
Good question, John.
Hey, Rich, I wanted to ask you a question. I know you do some, cattle stuff, and what's your feeling? I'm watching the price of, meat in the supermarket now, for the holidays and stuff. Even though turkeys were a little cheaper, the price of beef and pork is still going through the roof. You still think we got a lot more to go to the upside?
Not so much in pork. Seasonally at this time of the year, cattle and hogs make a high at the end of November and typically it'll go down. I think in 14 out of the last 15 years they've gone down. Those kinds of seasonal studies.
Repeat that again. Those kind of numbers I like to hear. 14 out of 15 years. Repeat that.
But there's always that 1 year that can so you got to use money management. But the seasonality is for cattle and hogs to make a top at this time of the year, and feeder cattle for that matter, and sell off.
Well, so, cattle are making sort of a double top from last year.
We'll have we'll have shortage of cattle, and if we get any, I look outside and there's actually some green grass on the curb, but if and when we get these severe snowstorms, that's when you'll really light up the cattle market, and you'll probably light up the February. Now, one of the interesting things is Japan has increased the age limit that they're willing to import meat. They're increasing it to 30 months of age from 24, starting with December. That'll have some impact on the demand for beef. But Japan's really a buyer of premium cuts, so I don't know how big of an impact. But the shortage you're talking about, I think eventually we'll have some much higher prices, but I'd buy the dip rather than step in right now because of the seasonality. I don't like those kinds of, I don't like to go against the flow of the market. And the other flow of the market is money in, the risk on and risk off. Every time somebody, Yahoo in D.C. says something about this fiscal cliff, the market goes up or down depending on if they are optimistic or negative about it. That fiscal cliff, by the way, is really not just about the taxes. It's also about how we need to balance our budget and cut some revenues. Simpson Bowles was the 1 to 3 is what they thought would work, and now the negotiations in D.C. it sounds like they want to do a 1-to-1, and that isn't going to cut it.
Yeah. But speaking of Washington,
look at gold yesterday. That'll show you the risk off. Guys just taking the money out of their positions.
Yeah. Speaking of Washington, and what's happening with Stevie Cohen at SAC Capital, it looks like they got some type of vendetta going against him because he gave so much money to Romney.
Yeah. Well, they have their enemy list, and they will get you by investigations. Now, it sounds like there's some material problems that occurred there, and in fact, they're having a news conference this afternoon. But or they'll do, like National Labor Relations Board went after Boeing when they were trying to build a plant in South Carolina. There's all kinds of ways they can do it, and so if they're going to punish their non-supporters, and they just have presidential directives. They can have a presidential directive that says we want to do this, and slow your business to a halt, and practically put you out of business.
That goes back to
kind of sad.
It goes back to McCarthy years before you were born, Rich. But that was a big thing back then when they used to almost go door to door trying to find communists. They made everybody a communist that they thought they wanted to make an enemy of.
I know.
Yeah,
and if you were guilty until proven innocent, and
that's for sure.
They didn't bother about proving you innocent.
Yeah, Rich, I've been in this business. This is my 6th decade, and I have never gotten a stock tip that ever worked or a commodity tip that ever worked. Every single one either didn't pan out or was an absolute disaster. That's one of the reasons why I became a technician, because I realized that nobody else knew anything either. So I tried to figure on the price, but I've never seen anybody do anything with inside information. It's just one of those things that I'm glad it's eluded me, because I wouldn't be interested in it anyway. But
my first tip was to buy pork bellies because they were going to $1, and it was Tommy who said it. And this is the king of the commodity world at the time. Tommy D.
Oh, yes, absolutely.
And so I bought pork belly, July pork bellies at 36 cents, and I bought more at 28, and I was just out of college. I didn't have any money. I ran out of money at 26. Now, they did go to $1 within a year, but didn't help me because I was out of money.
Yeah.
So it goes back to, you can be fundamentally right, but if your timing's wrong, you're going to lose money. But you can be fundamentally wrong, but if your timing's right, you can make money.
Yeah.
And you have to have some kind of money management to be able to stay in the game for when you're going to be right. And the only way to do that, in my opinion, is technicals, and of course that's what you're a master of.
Well, I know about a master, but I've certainly studied quite a bit of it. We actually, Rich, we've studied it together, buddy. We've been doing this for 40 years.
Well, like Leo, Da Vinci said when he was 87 years old, I'm a student, I'm still learning.
Yeah. You know what was amazing about Da Vinci is on his deathbed, his statement was, he said, I feel like I've lived my life in vain. And, it really was an amazing, because considering all of his accomplishments, and here is a man that is revered all over the world, and yet here he thought he was that he was an abject failure. And if you want to go see the Last Supper, you have to, get a reservation 6 months in advance, which will cost you $50, and you only get to stay 5 minutes in front of the painting.
I know.
I think it's in Turin, isn't it?
Right, and that's after standing in line for a long time.
Yeah, I know. That's we were there, and the line to get in to see David when we were in Florence was well over 2 hours, and it was in the rain, and so I went up to the people at the front of the line, and I'm offered them $100. If I could have their place in line, they turned me down.
Yeah. No,
so I bought Sarah a postcard, and I said, this is what it looks like, so tell everybody when you went to Italy you saw David, so.
Yeah, I've been there. You want to go in the off-season.
Yeah, I guess so. If there is such a thing as off-season in Italy, that's for sure.
Yeah.
Hey, Rich, thanks for joining us today, buddy, and
all right,
we'll have you on again pretty soon, okay?
Happy holidays. You bet.
You bet. Bye-bye.
Bye-bye.
Okay, that was Rich Anderson of Anderson Capital Management, and he's awfully nice. And boy, let me tell you, that guy he really knows a lot. Plus, he's in tune with many, many large traders that he has as customers and friends, and he does know the business, quite a bit. I first met Rich when he was 19, and I believe he was a broker at Payne Weber, and I was a client at that time, and I used to get on the Squawk Box and talk about Fibonacci, and he had an interest in it, and so we struck up a friendship that has lasted for quite a while. Now, I wanted to cover, since we're talking about the grain markets, I wanted to go over the rice market here, because this is the one that if we run into a period where, food is going to get, really, really in short supply, we have to really watch rice. Now, rice isn't really heavily traded like, corn and beans and also wheat, but it is the most staple food in all the world. More people eat rice, than anything else. So the rest of the world are rice eaters, where here we do corn and wheat, and of course we convert most of it into grain. But if we take a look at the rice chart, you'll see that it's been in a very strong consolidation level for the whole year. Since last December, it's been trading in about a $2 range, and if rice starts to move, that means we're going to have massive inflation across the world. And I mean, rice would have to get above $18 a bushel in order to to make this happen. But these are the things that we try to keep an eye on here, just to see if these things really occur. Right now, nothing really dramatic is happening. It's just in a trading range. And considering the drought that we had last year, rice really didn't do very much, which was thankful for the rest of the world, because they had enough rainfall that they were able to. Okay.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we're going to be talking about crude oil to end the show here. And what we're looking at in the Tiger TV is what's happened over the last month. And we've had some big swings of, $4 a barrel. It's gone up and down several times. But what's important is, and this is, how those of us that do pattern recognition, try to make our living, is to watch the expansions and contractions of these swings, because these are the ones that, tell us whether we are at support and resistance. And as you can see, yesterday, the crude oil made a beautiful Gartley pattern down there at that $85 a barrel level, and rallied well over, $3,000 a contract very, very quickly, and it stopped up at the 786 retracement. Now, I've only got a short period of time here. I want to review, for those of you that did the Newmont mining trade, if you bought the Newmont mining down at that 46.80 level, you don't want it to go below 45.80. I mean, just risk $1 in that stock. There is a potential for a triple bottom. Whether it holds or not, I don't know. The SDS calls, they're still valid. They're going to be valid if they're not moving in our favor by Tuesday of next week. I'm going to take bite the bullet on it. Right now, they're at about 30 cents or so, which is really not very much. The SDS stock is out about $1.20 or $1.10, something like that. So that's about it. You should be out of your Apple if you did the Apple calls. When it was down there around the 538 level. It went to 505 But there again, if you were in the calls never, went much lower than where we bought them because they were so cheap. And that's what we were trying to do, is to buy a really cheap call or buy a really cheap put and give yourself a little bit of time, to see if somebody's working. I don't recommend puts and calls very often because on the floor of the exchange, of the Chicago Board Options Exchange there at the corner of LaSalle and Jackson, when you go in, the floor traders in the options pit, they wear big badges, and they say, sell an option, buy a Mercedes. In other words, you be an option seller, you're far better off because 90% of all options that are bought or sold are executed worthless. So you want to be able to understand how those work because they have a lot of idiosyncrasies in those options because of the time things and the deltas, what they're called the Greeks, the alpha, the beta, the theta, the deltas, all these things that determine, volatility and stuff. And you have to really be an option specialist, to learn to do that. What I try to do is just find something really simple where you can buy something and you don't have to risk very much at all. It's more of a risk control vehicle than anything else. That's what we're trying to do. So what we're looking for in stocks is we were expecting the top to come in on the full moon and lunar eclipse yesterday, which is the 28th. We have a 3-day window on that, much like we had on the solar eclipse of the 13th of November. So that gives us till Monday. As long as the market doesn't run away and hide, above 1430 in the S&P and above 13,000, 200 or something in the Dow, then we've still got a relatively good chance. But the risk here is very, very small. It was only $1.50, so it's not. Of course, if you've got more than one, then it's more than $1.50. But that's what we're looking at as far as the risk parameter on this particular thing. The good part of this that I can see is the fact that the bond market has held up incredibly well. I mean, the bond market, given the fact that stocks had that, that pretty big move, should have really fallen a great deal, and they can only back off just a point. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.